Okay, we should be live. Let's see. Let's double check. Hello, guys, and welcome back to Deep Charts. Can you hear us and can you see us properly? Just give us a quick check in the chat so that we can finally start this new live session. Test, test, 1, 2, 3. Okay. Let me put the chat here so I don't see it on the screen. And okay, 1 second, guys, we'll start. Okay. Welcome back, everyone, to Deep Charts. Welcome back, Fabio. It's been a while since we saw you here on the channel. You've been trading, you've been around doing podcasts, doing live trading, doing boot camps. How are you today?
Very good, Andrea. Thank you for the invitation and welcome everyone in the official channel of Deep Charts.
Yeah, we're finally here. We've been posting a couple videos, guys, and today we're here because we've just finished a boot camp with Fabio. And to say the least, people went absolutely crazy. Like every time at the end of every live session in the chat, after Fabio was live, after I was live, calling every single market movement in real time in front of everyone, people absolutely loved it. And so we decided to share with you some of the insights, some of the strategies, some of the trading models, and some of the trades themselves that we took during these live sessions. And we've prepared them for you guys. So I hope you're hyped. Leave a 5 in the chat if you're ready so that we can start. I'm going to share the screen also for Fabio so he can follow through. Okay. And we can start from the beginning. Okay. Let's see, we should be able to see. Yeah. Awesome. So, welcome back to Deep Charts, everyone. It's a pleasure to be here. And in this live session, you will learn how to use auction market theory and deep profiles, which is one of our indicators, to find high probability trades. This is our version of the volume profile. And how to time these entries with simple order flow setups that you can start using right away. And second, you'll see some of the complete breakdown of the trades that we took live in front of thousands of people live, because there was a lot of people, you know, when we chart, when we explain order flow, you normally don't do it live in the markets, right? You do it looking at past charts. So a lot of people were saying, rightfully so, but this is all hindsight stuff. Yeah, it's too easy with the benefit of hindsight. So we decided to prove it live, and it was absolutely amazing, and we'll show you some today. And I would like to start first with a quick recap of, some people say there's no sound. Let me double check. It's too easy with the benefit of... No, there's the sound. Yeah. The stream is all right. Yeah. So, a quick recap on how order flow works, right? You guys should be all familiar with it. There's passive buyers, passive sellers in the order book, and there's aggressive market participants that are market buyers and sellers, okay? And when these market participants are matched, that's how price moves. So if this buyer buys from this seller, and that's a match, that becomes the new price. The candle opens, and on the background of price action, through order flow, we can see aggressive buyer and aggressive sellers, so we can have a recap of the trading activity through what we call the deep print, formerly known as footprint charts, also known as order flow candle or deep candles. And so the footprint basically shows us who's buying where and who is selling where, okay? For example, a buyer comes, an aggressive buyer comes, buys 2 contracts from this guy at 101. Well, that becomes the new price. And those 2 contracts are traded. So we basically see with order flow the trading activity that moves price action, that is behind the scenes of price action. So if a seller comes, it's filled a little bit here, a little bit here. Well, we will see these 2 contracts going here, these 3 going here, and that's exactly what price does. So order flow is leading price, okay? A leading cause of price movements. And we can summarize the cause of price movements and price movements with the classic footprint charts, or bid-ask footprint, or deep candles, however you want to call them, or with something like the volume profile. So if the footprint tells you who was more aggressive, if buyers or sellers, volume profile tells you overall where the most of the trading activity happened. Okay? Yeah, if you see me with not a great microphone, it's because I'm currently in Italy on holidays, so I don't have the studio mic with me, but I'm pretty sure it's pretty, the audio is pretty much decent. You can hear what I'm saying. And now the classic example I make is, let's imagine Apple has just discovered a new technology that will 10x their profits. What will happen to the stock price? What will investors and traders do? Well, the first thing is you're going to see a lot less sellers in the book, a lot less paintings of the auction, as I like to say, and you'll see a lot of aggressive buyer coming in. And that's what we'll see, what you will start seeing is typically this, right? The candle going outside of your screen and poking through your ceiling. This doesn't happen because there's more buyers than sellers, but because buyers were willing to pay worse and worse prices as long as they could get their hands on a passive seller, right? And this is the mechanics behind it, right? And so when a price action trader, if he's selling from a resistance, will wait for a candle to close, we can already see with the footprint chart and with volume that a big buyer was absorbed here by a big seller. So we can already see here who's in control. And that's the beauty of order flow, right? And then we move one step closer to the auction market theory, okay? And this is the basics of all the models of Fabio, the basics of all the models that we applied in the boot camp. One second. Yeah. And this is the volume profile, okay? This is a daily volume profile. And the volume profile has two areas, right? There's an orange area and there is this gray area, right? And this basically shows you how much money was traded during a day. And there's not only all the data related to volume, but also it plots this thing called a standard deviation. And if you have ever studied statistics, or if you've ever studied a little bit of maths, you know this is a Gaussian curve, right? Which shows the probability density function of elements in a sample, right? So normally, in a lot of observable phenomenon in nature, you will see that 68% of samples fall under the so-called one standard deviation, okay? And 95% is 2 standard deviation, 99 is 3 standard deviations. So let me explain what this really means. Let's make an example. Let's make, this is an example I like to make to keep the fun going. Let's say we measure the length of penises of males in a population, right? Well, you have a lot of people in the average zone, a lot of samples in the average sized penis, and very few people in the smaller sized, and very few people in the higher sized, okay? Very simple to understand. Or if you measure the height, same thing will happen. A lot of people fall under the first standard deviation, or the first, let's say, a value between 160 and 180 centimeters. And this is where normality is. This is where anomalies are, okay, by definition. Because you have super tall people and super short people, and they don't happen that often in any type of distribution. Well, we can do the same thing with volume. We can take the distribution of volume in a session and say, hey, supply and demand was mostly between this level and this level. And anything that happened outside during that specific session is to be considered, statistically speaking, an anomaly. And so this is the principle behind the idea of failed auction and breakouts, right? And you'll understand it now. So this is the model of the auction market theory, right? You see there's two basically situations. You have situations of balanced market, of fair value, and an area of imbalanced market, of price discovery, okay? And then again, balanced market, fair value areas. And if you take a look at the volume profile of such distribution of price, what you will notice is it will look something like this. You have most of the volume around these areas and the lowest volume around these areas, right? So we go a little deeper and we realize that if anything that happens outside of the normal distribution is to be considered an anomaly, most of the breakouts will be fake. Most of the breakouts that will happen outside of an area of value will often revert back to the mean. Because that's how, statistically speaking, the world works in many areas of life. So this is just a statistical reference. But then what you do is you look inside of these areas, and not only you rely on a statistical model, but you look deep inside on the meaning behind things. And you look inside of this area and you see what happens with order flow and who's really dominating the market. Because most of the times in these breakouts, you will see that there is an imbalance that starts happening, volume that starts increasing but then fades out. As Fabio also says a lot of times, there is no follow through. You might see big trades coming in and then being completely absorbed and price going back into the range. That's a good reversal setup, for example. That's one of the setups that Fabio and I trade. But what you often see during breakouts is you see a lot of big trades on the way out that are not being absorbed, that they're really leading the auction. And this is the basic of most of the models that we've applied in the bootcamp. So instead of, when you see markets like this, I invite you strongly to not just draw the highs and the lows. Because drawing highs and lows means looking at visual reference points, not at the root cause of things. So what I invite you to do is not to just mark highs and lows like we were in 1850 with Your Majesty, Mr. Charles Dow. Okay, because this is all Dow theory. I'm not saying this is wrong, huh? I'm saying this is a little bit outdated because we don't want to just look for pattern, we want to look for meaning and statistics. Take a look at where the ranges are, right? Because that's where the volume is. And then look at what happens during the breakouts. Is it a strong breakout that has a follow through, or is it a failed breakout? That's all market is. Because here, markets can transact inefficiently, and here, big market participants can transact efficiently. This is where smart money likes to trade, because they can have the time to get their fill at a decent price, at a decent level, and this is what gets those orders into profit, okay? But typically, less of the smart money happens here, most happens here, because of order filling dynamics, okay? So you take, for example, a normal distribution, and one of the ideas you might have is to fade. So you want to sell from here and buy from here. That's the first idea. The next idea is you might want to buy a breakout. You might see that we're in a clear uptrend. There was an upward imbalance. Then we found a situation of balance where both aggressive sellers and aggressive buyers agreed that this was the fair price. You had a failed auction, and then during the breakout, you saw more aggression, more volume, participation, and through order flow really getting to see who's in control, not just by candles, okay? And you can see this in the footprint chart with initiative candles, right? This was what you use for timing. You look at footprint charts, you look at our deep prints, And what you want to see is high volume in the breakouts, high delta, a lot of imbalances. So all of these numbers here in red or blue, a widespread volume distribution throughout all the candle, and you want to see a full candle, okay? You want to see price being led. And so you'll typically see high delta percentage, high volume, high participation. This is what you want to see during a breakout. You don't want to see an absorption, for example, where you see all of the volume in one place, a candle spiking down, and sellers taking control. You don't want to see this, right? You also don't want to see an exhaustion. You don't want to see sellers pushing down and then disappearing completely. Look at the volume. Oh, look at the shape of this volume, right? How it was high, and then it started going lower and lower and lower and lower. You don't want to see this, right? These are all failed attempts. You want to see strength. Or you want to look at where big numbers are. And you see that a big buyer was absorbed here, and a big seller was trying to be absorbed here, but then they completely won the battle, and so you know it's a confirmation to sell. So what you really use order flow and footprint charts for is timing your entries. And you look at big trades, you look at the numbers, you look at the sessions. Most of these breakouts happen during the cash session. And then what we did in the bootcamp, and what you might add as an extra confirmation or as your bias, can be seen, for example, with the opening range breakout, which is a very common model nowadays. But then we, kind of improved it with statistical analysis and volume, as Fabio may show later, as we've explained with the IDB model, where you basically take the first 3 5-minute candles, or the first 15-minute range, and you wait for the breakout. A lot of traders will blindly trade the breakout. But you can put this edge, which is, historically speaking, reasonably valid, okay, just with price action, because this is the history of just a very normal opening range breakout compared to the S&P 500 buying and holding. This is just opening range breakout performance. It's already a great strategy, but this is not considering volume. If you were to consider volume in the equation, you not only have a statistically valid model that gives you an edge statistically, but also you really take a look at smart money through the lens of order flow, through the lens of deep prints and big trades, or with deep trades, which is an update that we will show you very soon, but it's absolutely phenomenal. So you use both. You use numbers on your side from the statistical perspective and numbers on your side from an order flow perspective. Okay? Or you might take another very common pattern, which is the gap fill, right? From the previous cash session to the next cash session. You wait for the first 3 5-minute candles. This is a 5-minute chart. You see there's volume in this candle and order flow and initiative. Well, you have two edges. Gaps are getting filled 70% of the time. Strong breakouts from opening ranges also go up 50 to 60% of the time, if not 70. So you compound the edges altogether. And that's exactly what we did. This is just some performance of a very basic gap fill strategy. So here's some example of trades that we took live. And this is the first idea of November 17th. And what basically happened on November 7th, this was the very first live session. And what we saw was exactly this, a normal distribution. And every time price went here, you saw sellers being absorbed, sellers being absorbed, sellers being absorbed behind here that you can't see. And then those bubbles, those aggressive sellers actually won the battle. And buyers got absorbed instead on the same level at the breakout of this. All of these were failed auctions. All of these were failed auctions as well. But during the breakout, if there's participation of smart money, and you can see it through our indicator suite, unlike most other charting platforms, This was November 17. We gave the trade idea here on the breakout, just following a very basic rule of finding institutional participation outside of value areas. And that was the target, in front of thousands of people. And we did it every day for a month. And you know how Fabio does it, okay? This is just some example of me, but you know how Fabio does it. You know how he calls literally everything that happens beforehand. This is another idea that we shared on November 24th. There was the balanced situation. We had the opening range here, some buyers and sellers battling here, and we waited simply for a breakout of the opening range with a very strong initiative candle. A lot of green, a lot of delta. We gave a test, we enter the trade, and it went up for the entirety of the session. Again, called live in front of thousands of people. And if someone from our bootcamp is here in the chat, please write in the chat if what I'm saying is true and was seen live, and what was your experience during the bootcamp. This is another idea we had on November 3rd. We had a clear situation of balance in the previous session, right? Price tried to go up, but then this was the main fair value. And then this is our area, right? These purple areas, it's simply the value areas of the previous session. And the first thing that happened is from one area we went to the next one. And what we were waiting for here is for a breakout of this big area of volume. Look at the chat exploding with yes, it's true, 100% true and mind-blowing. Nice. Thank you guys. Thank you for supporting. And during this breakout over here, we decided to take a trade because there was also the opening range. And we took it live, just like this. We just used the normal version with, an opening range breakout, a very basic opening range breakout with volume, so an initial volume breakout. And then we went to the 1 minute time frame and looked for order flow confirmations. And you can clearly just see here, not just look at the numbers, but just the colors, right? When there's higher colors, it means there's more volume, right? And you see that this breakout has a lot of volume, has a lot of participation. And so we took that candle, look at where the imbalances were, and that's our sniper entry. And needless to say, what happened next? Which was price went exactly in our favor and ended the session with a beautiful profit. And this is just some example of trades that we took. And this is, again, an example of how, with a very basic framework that combines based on real data, you can get a real edge. And we proved it in front of thousands of people. We're really happy about it. And you can start implementing these ideas today, okay? And I see the chat is basically exploding now. Fabio, you're the GOAT. Fabio and Andrea, really amazing. Bootcamp was crazy. Was an eye-opener. 100% true. Nice. Thank you, guys. And Fabio, I'll leave you also speaking a little bit because you also took a lot of trades during the bootcamp. People really appreciated it. It's not like it's a new thing for you, but it was really amazing to see order flow in action. And we hope we can see some more example tonight with you as well.
Can you hear me, Andrea? I put the professional microphone, so now the voice should be way better.
Yes.
Can they hear me also?
Yeah.
Amazing feedback.
It was really amazing to see. Yeah.
Okay, you can hear, perfect. Amazing, so let's go deep in details. So first thing I want to say to you is that we are producing a huge amount of content for YouTube, on the YouTube on Andrea and my YouTube, and we will continue to upload sessions. Okay, so you will be able to continue to see the practice. And if you are in deep charts, usually on Monday, we do market preparation with me. for the long term, so for the multi-day setups or the profile. And now I want to show you something. I want to make share screen. Andrea, tell me if they can see properly. Let's check if it's visible. Should be visible the regular trading hours profile on NASDAQ, the multi-day profile. Give me a check. They can see on the charts. Amazing. Okay. They say that it's low. Okay. Perfect. So this is what I do every week, guys, for my market preparation. And what I do here is just the analysis of the profile because at the end of the day, the market can only have two scenarios and two regime. The first regime is balance. And this is when you are inside the profile. And inside the profile, you have usually a range-bound market. So it's like if it's closed in a cage, you can fade the bottom or fade the top. And you have really nice setups that for scalpers can be really amazing risk-to-reward trades. In the bootcamp that now is closed anyway, okay, so you cannot get the bootcamp at the moment, but in the bootcamp we saw all these short days. We loaded some longs before, but we saw short days, and also the last week we did market preparation for this one, for this one, and I explained to everyone why my expectancy for the week was to go back to the POC, that is this one, 25,050. And for this week, we did market preparation on Monday. I do one session per week, and the other one is with Andrea, and the other is with Rodolfo. My expectation was to go back to the POC, the value area high and the composite POC that is here. And we were here. Okay, why? Because we are building value on the top. So I want just to help everyone that is struggling at the moment with bias, that have 75 indicators on chart, some price action model, some indicators model, a lot of confusion, but at the end of the month, you don't make profit. Okay, so if you are in a condition where you don't make profit and you still think that your model is working, maybe the problem is not psychology and you should listen a little bit. Okay, what I want to explain to you is that there are multiple ways to identify bias, but there are few ways that actually work. Okay, profile framing is one way to identify bias that really work. Okay, because you can see where big market participants, because we are retail. Okay, we make 5% of the market. We cannot move a market like this. Okay, but we can see what they are actually doing. And in this week, they are actually building value higher, and you can see from the consecutive profile. And when we do this kind of analysis, we know, first of all, the market regime. For example, the market regime for today is expansion. We are above the value area high. And this is the reason the IVB model steps in. I want to show you, this is a quantitative model built by Antonio on my indication. And this is the session of today. Okay, so the IVB model is a model that don't let you trade when you are in consolidation, but step in with really precise statistical level where you are in expansion. And as you can see here, you can see an acceleration of the market clear. And what EVB does, and the reason EVB works so much better than the usual orb, is that the IVB input volume, look at the small change that I'm going to make, okay? I go on settings, and I go here on delta volume bar, okay? What do you notice if I step in? You notice really narrow candle, so small activity here. And then you notice one huge candle green. This candle is full of volume, okay? You notice one red delta candle. It means that sellers try to protect, but they got completely absorbed. And then you see another follow through, a candle full of volume. This is a clean breakout, a valid breakout, okay? And you can see how much this level is sensitive. The sellers approach, they are completely absorbed, but the buyers create this deep green candle. That means that it's full of volume, okay? And the study also project for you the bias, okay? The bias is up. 47% of the session are directional, and the protection level. What is the protection level? Is the most conservative target for the day. And then we have also really big target that this is the extended average, so the maximum target that you can take for the day. So usually what people do when they trade model based on statistics, maybe they take a snipers here, it's already 1 to 3, 1 to 4, and then they put the protection level for break even. Okay, so for example, if you enter here, you take some partial and you let it run. This is two models, the IVB and the profile framing, two models that can help you to understand better how to map the market, because this is where people are really confused. Okay, sometimes you use as a reference for structure the last breakout. So the market breakout short, you start to load short. In 5 minutes, it break long, you start to load long. So you are really confused on the actual bias of the market. What you are using here is institutional proxy. Okay, you are watching actually the cash session. That is the session that covers the majority of the volume of the day, where is accepting value. Okay, and if it's accepting value higher, there is no way around. They are building value, they want to go there. Okay, and as you can see, before the market reverse, usually you have multiple sessions. The market reverse here for the first time, and you have 1, 2, 3, 4, 5, 6, 7 directional day. Okay, so you can understand that also if your risk to reward is not so big, you can still frame perfect market direction for weeks. And now that we flip from this day, the 18, we are keeping from the last 3 days the direction long. Okay, today we are expanding back to the POC. Now someone says, okay, it's nice, it's amazing to frame the setup, but we are not swing traders. Okay, so what deep charts can provide in the precision frame of the execution model? And this is the most famous indicator that I'm using from years, and you can watch it here. This one, let me take it. Okay, this one is what you saw me using to live trade in, I think, already 3-4 podcasts, trading live. And I will say something to you that it don't need to sound complicated, okay? What are deep trades? Are the biggest order execution, okay? So they are a proxy for interest. And the things that I watch here is interest and result. So if I see a lot of push in one direction in volume, but there is no follow through, so there is no result, this direction is not valid for me. I can make an example for you, because this is the session of today. Okay, what we can see here is a huge attempt from the sellers to create a breakout. Okay, this is what I call a failed auction. There is 21 contracts in one price level that is held from multiple candles. Okay, you can also input the delta candle here, so you can see deeper, and you can see that this candle is full of sell delta, this candle is full of sell delta, but the result is 0. Okay, so this level is holding. Now, people like to trade breakout and test, but breakout and test don't give you information about how the volume is moving in this condition. And here, this was a AAA setup for the session of today long. Why long? Because we already saw. Okay, we saw in the market preparation and we saw from profile framing. Another example of where sellers are not rewarded at all is this one. Okay, this candle, they are completely rewarded. There is a huge momentum sell, but you can see from this candle that they are not having any results. Okay, they are completely absorbed. So when you mark this level, you understand how much volume is powerful in giving you information about what they are going to do next, if they are going to create a breakout, or if the buyers that you can see from here, this participation, are going to protect this level. And if you mark this area, this is the beginning of the move, you can see that when the market went back to this level, okay, they accumulated again and the market went up. If we go to the actual situation, you can see that on this level where the IVB is not yet valid, so you understand the interaction between market participants, okay, this was the level. You can see that in all this week, we have a huge attempt to the buyers to break out. They all failed, okay? When is the first time where they had an interesting result? Here, okay, why? Because they got rewarded. And this is where you have a clean direction day, because here they get rewarded, the market reload. You have a huge aggression of the buyers, volume candle, this is delta candle. Look at the sellers, 222 contract and 209 contract absorbed on the same candle. How can you think about going short here? Okay, this is my way to go. Okay, this is my way to go. Unfortunately, I cannot see this without volume. So to all the people that are saying, no, but it's useless to buy order flow, is the same. I always reply the same. If you are a professional, a high-rank professional, and you make money using information, is information a cost or is information an investment? Can you reply in chat? If you exactly know when a candle is backed by volume and who is winning the battle, in the same price level, you see the reaction that you have after. Okay, look at the reaction. This is not random, guys. There is a reason for this. Okay, and when you have everything mapped, because we built this study during the years, okay, you know exactly what's happening because you start from the frame of the profile, you go into the interaction between market participants, okay? You go between the statistical level, and then you can add all the study about deep volume analysis. One example, this is one study that I built 4 years ago, and then we ported to deep charts, and we included in the full. This study is the deep effort. So what this study is making is categorizing the interaction between market participants, between aggressive and passive orders, okay? And these areas are areas where you have a clean result of the aggressive market participants. Let's make an example. Control of the sellers, control of the sellers, control of the sellers. This is the first time where the sellers lose control of the market reverse. Control of the buyers, still control of the buyers. Okay, so how I use it? I use this in a very specific way. Let's say that I'm going to consider long. Okay, I'm going to consider long from this area, for example, the yesterday gap. I want to be sure that after I frame my area, I'm going to jump in the market when the market is telling me buyers are in control. Where can I cover myself? Below the low or below the area. So I can make here a 1 to 3, a 1 to 4, okay? Then when buyers lose control, okay, I wait. I wait till they get back control. And this one that you see here, it's a regression. So you have also a proxy of the acceleration of the market. And this one, it's an indicator that needs context, because remember, there is no indicator that gives you certainties. These are all indicators built by a team of professionals based on probabilities. So you have a probability that if you stack this area and you have a long here and you have an expectation to go long for the session, if you load and build position here, you have probabilities that you will continue higher. Specifically when these buyers completely destroy these sellers. Okay, this is when they created a gap. And you can merge this with the IVB, the statistical projection, and the profile level. Okay, all of this together is what we use for the market preparation on Monday. Okay, it's nothing complex. Then, if we go on more complex study, we can go, for example, on study like this one. This one is using the volume bars, and is giving you at the same moment the profile. So you have the distribution of the day, and the distribution of the day is expansion. Okay, so we already had a huge acceleration, but we expect maybe a continuation for the day. So you see that you are above the value area I, so you are in a movement that is not balanced at all, it's an imbalance condition. You can see clearly all the most important absorption area. Look at this one. Okay, this is called the delta footprint. What you see? You see buyers attempting to create a breakout completely absorbed. Okay, you see that in this week it's full of volume. This is where the sellers take back control. When you break this level is exactly in time when you break also the IVB. Now it's all lined on the long side. Okay, below you have a distribution of the volume, okay, from aggregate orders. And here on the right, in the same chart, you have the delta profile. So you have the shape of the day, you have the single candle volume, divided by market participants. You have the deep print with all the candles, so you can spot when you go high, you can spot what's happening in the week. Okay, so for example, what we see here, we see that this week was full of sellers, it was a big delta, but created a failed auction. Okay, and this is exactly the moment where if you want to do market timing and you are late in the movement, you can jump in. Or here, where all these sellers got absorbed. Then, if you want to have a no-brainer and you want to understand what's happening actually, you can see that the level where the buyers are the most aggressive is this cluster here, and you can see from this delta that is exactly when they broke the top, and this delta here. Okay, sellers got completely absorbed here, and you can see from the delta profile and also from the footprint, okay? And if you want to see from single volume, you can see that on this candle, there was a huge absorption of the sellers. The second most huge absorption of the sellers is this one, okay? So all these areas are areas of control of the buyers. And the same information we can get when we go on the deep trades, okay? Because if we want to use this, we can go to the beginning of the day and we can understand that this one is exactly the area that I marked for you. 1, 2, and 3. So you see that with volume, there is a coherence of information because order flow at the end of the day is the most democratic indicators available, okay? Because what I see is what you see. I don't have this contract because I'm paying more the data. It's always the same, okay? I tried XFeed, I tried Rhythmic, I tried CQG. Yeah, maybe if you are an institution, you can have something better. But still, at the end of the day, we, small retail that trade from home with less than 100 million account, we all have the same data, okay? So this is a summary of my market preparation. And this is what I helped Deep Charts to build, the Deep Effort and the IVB. And at the moment, we are already working on something else, but I cannot spoiler for you, okay? But know that soon, okay, we will have more information about the total market volume, because you know that that volume is not only exchanging futures, so we can add even more confluence about this. And this is the day that I had, guys. This is the market preparation that I usually do on Monday. And this is the toolkit that I use, but know that this is only maybe 5% of the studies that we have in Deep Charts, because we have like 20 to 30 templates from Rodolfo. Andrea have his own stop run indicators. We have a huge amount of indicators. Go, Andrea.
Okay, now people should be back to hearing me as well. And yes, absolutely. That's phenomenal stuff, Fabio. Thank you very much. People are loving this in the chat as well. So let me share with you the screen. 1 second. Where is it? I think I lost. Okay. It's below here. So guys, did you like this live session up until now? All right, it's also said about the investment. Of course, it's an investment. Yeah. So let's get back to our slideshow real quick. And so let's quickly recap what you've learned tonight. First is the best way to find an edge is with data, okay? Is with numbers. Do you agree with this? So combining order flow with statistical validation, with statistical data, just how Fabio did, just how all of our team of developers is doing, and you base your ideas on something real, not on some conspiracy theory, not just on partial information such as candles, not just on some idea that maybe have worked, but something that is proven. Okay, you based your ideas on realities. So order flow and statistics. And we have proven this is the best model to base your trade around live, hundreds of times in the last bootcamp, and it was phenomenal. Okay, so the question is, would you like to see more of this? Would you like to see more of this, guys? Because if the answer is yes, then allow me to recap what normally comes with Deep Charts Full and what comes as of now on the Deep Charts Full. Because we had a boot camp, but we want to give some continuity to the people. We want to keep giving some value. Plus, we're on Christmas, okay? So we want to have an extra gift inside of the Deep Charts Full version. So you have everything that you've already have, the deep print indicators, all the volume indicators, the volume profile, the delta profiles, literally everything you can want from an order flow perspective. You have the deep trades that have an upgrade which is coming out very soon, which is absolutely phenomenal, putting MBO data inside so that you can actually see on an order by order basis which one are the really big trades. Then you have the IVB model by Fabervaale. One of the models he produced based on the opening range breakout with statistical analysis behind it, volume, pressure, and imbalance to time the entry. Absolutely phenomenal model that has been proven to work with statistically speaking over the last 20 years probably. Then you have the deep effort on NASDAQ, always by Fabervaale, and which is the one he just showed you with the boxes that shows you what's the path that the price is most and the market is most likely to be doing, with an amazing level of accuracy that you cannot find in any other charting platform out there. Then you have the stop run spotter and the icebergs that I've developed through time. You can spot the stop runs, and there's a full strategy about it. Then you have all of the.
Is this a new one, Andrea? The stop sun.
Stop sun, yeah, yeah. There's probably a typo there. It's a stop run. But yeah, also another beautiful model there with a lot of statistical validation behind. And then all of the suite that Volumetrica has built, that the Deep Charts team with Antonio and Rodolfo that are traders for tens of years have done. The Deep V Tracker and the Deep Pattern Builder, which is an advanced one. We've recently presented it properly, and it basically allows you, if you're an advanced trader and you're a little bit techie and nerd, you can build your own pattern. You can build your own signal. It's basically building your own little indicator inside of the Deep Charts itself, which is absolutely phenomenal for those who are a little bit more techie and wants to build themselves. If you don't want to build it yourself, we still have a lot of templates with these stuff, so you do not have to figure it out yourself, and you have hours and hours of live sessions that explain how to do this. Then you have the backtester. You guys know it's one of the best backtesters you can find around. It gives you all the intragranular data. So absolutely phenomenal backtester. You know you have the risk manager, so you don't over risk, you don't oversize, you cap the risk. It's literally an all-in-one platform, one of the best ones out there. And you have the trade copier. If you have multiple accounts with prop firms, you can copy the trades in the multiple accounts. Plus, on top of that, you have a free order flow course, you have tutorials of everything, you have a Discord community, but also, starting today, you have one live session per week with Fabio, where, as he's shown you, he's giving you the best areas with the volume profiles for the next week. So we can market prep together at the beginning of the week and see how the market and the auction evolves through time. Then he's busy, guys. He has to trade, okay? So we'll have also a week live session with me where we do charting, where we go New York Open, and we'll look at the opening range. See if it's worth trading it with, and checking if the order flow is on our side, looking at the auction market theory in real time, blah, 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 blah. Plus an extra live session a week with the deep team where we get deep into the proprietary studies, all of the indicators, so you can have the time to learn all of this. And guess what? All of these bonuses are free. There's no extra cost. Unlike the bootcamp, it's all for free. It's all included with all of our templates for every single indicator inside of the Deep Charts Full, which, as of today, if you go on deepcharts.com, we have 30% off on anything for the next 15 days as a Christmas sale event. So you go on pricing, you choose either the 1 year, which bills on $69 a month. Guys, that's less than a coffee per day to invest in your trading journey. to become a professional. That's absolutely ridiculous amount of money. Ridiculous as in super low. You have the 6 months option, you have the 3 months option. A 1 month option is going to be available very soon, but there's also going to be an order flow version coming soon, which is not going to have all of these live sessions and all of these models. It's going to be a more simple version, but we still want to make it affordable to people because this is professional trading, guys. Like this is not some, free platform that secretly steals you money out of commissions. This is a professional grade, institutional level platform. So go on deeptrust.com right now. I'm going to link it to the chat just in case. And I hope to see you guys inside of Deep Trust because the community is absolutely phenomenal. I want to personally thank you, all of the community, because they've been absolutely amazing, absolutely super supportive, and it's just been amazing. So thank you also, guys, for supporting us in this journey to make professional trading great again. And I see some comments already. Yeah.
We don't have a partner for prop firm, guys. You can choose which one you like. We don't have a specific prop firm.
For all of those people who don't have deep charts yet, let me tell you, it's worth investing every single penny. Best investment you can have as a trader, and you want an amazing professional platform. Thank you very much, Gallo. This is one of the best platforms, so easily worth it. Thank you very much, guys. We appreciate it. What if I already paid for 3 months and I want this upgrade? Just buy another 3 months. It's going to go directly on top of your current 3 months, or contact our team on our website. They're always available for you guys. You just click here and contact the team, and they're going to be able to support you. This is, by the way, some of the events that, this is the boot camp that I was taking the screenshots previously for. Ask our team how it works for the discounts, and these are the next live sessions. So for January, of course, we're going to have a little less because it's New Year's Eve, it's Christmas, so we're not going to be doing live sessions then. But right after that, we start 3 live sessions per week, and it's going to be absolutely phenomenal, you guys, and you don't want to miss it. So we hope to see you there, and to see you around YouTube, because a lot of value is coming on Fabio's channel, a lot of value is coming on my channel, and on this channel as well. So if you haven't subscribed yet, smash the like button, smash the subscribe button, and get all of this free knowledge because it's absolutely worth it. And thank you again, Fabio, for being with us here tonight, and I hope to see you around very soon. And happy trading and Merry Christmas to all the community. Have a good one.